Okay, here is a quick one. Here is a screenshot of some trades that I took. Okay, so now I've not been too strong, so this is a pre-recorded video. All right, so at your leisure time, just glance through it. You just need to just explain some few concepts here. Okay, so I already showed you how you can navigate through this platform. Okay, you can see where you enter your trade amount, the time the trade is going to expire, and your percentage return on every investment. Okay, so the only concept I want to explain on this particular short screenshot here is this area, this area, this area, this area, and this area. Okay, so as a beginner, please make sure you have you open your trades on 5 minutes. Open your trade on 5 minutes. So on this expiration here, if you click that button there, you are going to see the timer. Select 5 minutes. They didn't write 5 minutes there exactly, but you are going to see a countdown timer. I think 4 minutes 53 seconds. And remember, after every trade, the fact that you selected 5 minutes, it automatically resets to 1 minute after all. So after selecting 5 minutes, if you open a position, make sure to go back, and if you want to open another position, make sure you select 5 minutes. The reason why I want you to select 5 minutes is because of the time frame. There is enough time for you as a beginner to think. You understand? 5 minutes is a lot of time for you to think and open up profitable trades. You understand? But if you are going to be taking quick trades on 1 minute, that is going to take you time to master, because on 1 minute sometimes you may experience late entries and the rest. So you always have issues on 1 minute. You get? So it's not really that easy like that. So you practice on 5 minutes and use the previous strategy that I showed you of using reversal candlesticks. When you see a reversal pattern, you switch to 5 seconds with your confirmation. Just like I explained, you open your position. Okay, so for this particular situation, you can see that this entire area is a strong level of resistance. You can see resistance, meaning a seller's area. You can see seller's continuous entry. Sellers entered at that area. Okay, so a strong level of resistance. And then look at the entry point. So if you enter after seeing this, let me zoom out. Okay, if you open your position here after seeing this particular candlestick at this strong sellers area, the next candle you can see 1 2 3 4 5. You can see after 5 minutes you will be in profit, because the goal is for you to sell and your position should be lower. You understand? In the situation of buyers, you are supposed to buy and position should be higher than your opening position, then you'll be in profit, right? Then look at the next level again. The market got to the same level again. If you open your position for that place, you count 1 2 3 4 5. You can see that after 5 minutes it didn't actually work here. So sometimes it's not always that it's going to work. So you can see at this situation it didn't work. Okay, but let's see this particular scenario again. Look at the entry candle 1 2 3. Okay, sorry, it worked there. What am I saying? This malaria has not allowed me to clear my eyes. Let me see. Yes, it worked here. This is the first candle, right? 1 2 3 4 5. So you can see it worked. Same thing here. I will say, because I know this thing worked, because I was the one that plotted this graph. Now wondering how comes. So you can see here 1 2 3 4 5. It worked. Here again 1 2 3 4 5. You can see down to this particular chart also. look at, finally we saw a massive sell off from sellers. 1 2 3 4 5. You can see strong massive push. So you can see at this on this chart you have how many opportunities you have. Like, let me say you have like 1 2 3 4 5 opportunities if you wait patiently. Okay, but in the moment the market breaks out, you have to leave the chart and wait for another setup. Okay, so for this scenario it worked. All right, so let's see another example. Okay, so this one was taken today. So you can see now this is a clear naked chart. As a beginner trader, you may be confused. What are you supposed to do in situation like this? Okay, so the goal here is to show you candlestick psychology. What is the meaning of candlestick psychology or market psychology? Candlestick psychology simply means the patterns in which, or the ways in which the candles move. If you can study the behavior of the candlestick and figure out exactly what the market is doing, you should be able to open profitable trades. Now look at the same screenshot here. Look at, this is the same screenshot after plotting all the levels. This same chart is the same chart here. Let me look at the same chart. This is the same chart. You can see. You can always pause the video and go back and check very well. Look at the real chart without any levels. I didn't draw any level. That's why I took two shots so that you'll be able to see what I'm talking about clearly. Then look at the same chart. Now I've plotted all the levels that I can see. You understand? So one thing with trading is, once you understand the psychology behind every candlestick, there is no way you will not be able to open profitable trades. Okay, if you can understand the psychology behind every candlestick, you should be able to open profitable trades. So if you are in a market where you don't understand the behavior of the candlesticks, please don't leave that chart and check another chart. Okay, leave the chart and check another chart. So this is Great Britain pound, United States dollar. Okay, so if you see here, you can see that this is a strong sellers entered, then at that level buyers entered, again sellers, buyers, sellers, buyers, sellers, buyers, sellers, buyers, like that. See how the market kept moving. Okay, now there are all the levels are nothing but levels of support and resistances. But before you plot a successful level of support and resistance, make sure that you have two levels. Make sure it is working. At this particular area now, this was a level of resistance. This is a resistance, and then, but it is not a valid resistance until it worked here. So here made it a valid resistance. So this is a valid resistance. That means it is working. But sometimes the patience of waiting all this while, it is discipline. You have to discipline yourself. Okay, you have to discipline yourself. You can see for like 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15 16 17 18 19 20 21 22 23, like that. I think about 1 hour, over an hour, before the market now got to the resistance again. You see, then, but before you open any position, you make sure you have a confirmation candle, a bearish candlestick, confirming that yes, sellers are willing to push the market downwards, just like we saw here. This is a confirmation candle, even though it's not an engulfing candle, it's not a reversal hammer candlestick like that, but in this scenario it should work. Okay, and you can see, if you open a position for 5 minutes, you can see that it is going to be in profit. Okay, because at this time sellers will be selling. So always remember to check the news. Please always check news before you open your chart. Make it a habit. know the time they are going to release big news. But as time goes on, once you master it, you can open chart without looking at the news, because once you are in the market, if you see the movement of the candlestick when there is a news release, you will know, even without checking the charts. Okay, so look, all these are the various entry points on this chart. There is a buyer, look, all these are buyers entry level. Then the whole entire of this area is the level of support, up is the level of resistance. So this is like a ranging market. Okay, the market is moving within this range. Okay, so in this situation, you wait for levels of support and resistances only to open your chart. But in between, you can see in between that there are psychology behind the candles. Okay, there is a seller area here. So you can see sellers enter at this level, sellers enter at that area. After breakout, there is a breakout candle here. After breakout, the market again reversed, sellers entered again, because 70% of the time, the chances of getting reversals after breakout is very, very high. Okay, and I also taught you that once a level of resistance gets broken, it becomes support. Once a level of support gets broken, it becomes resistance. Okay, and let me say this quickly before I leave. Please don't spend more than 2 hours on the chart when you are practicing. Don't spend more than 2 hours. It is a discipline you need to imbibe. Some of us don't have this opportunity when we learn. Nobody taught us. Some of these things we figured it on our own, because spending too much time on the chart will make you to begin to overtrade, thereby forming a bad habit. That was why I noticed something was going on your demo account. I don't know who replenished the account to $10,000. I don't know who replenished. Why did you replenish the account to $10,000? I purposely reduced the trading amount to $100. I did that on purpose. Why? Because you know there's a trick. On your practice account, they can continue to replenish it anytime, any moment. But you know that you cannot deposit $10,000 in that account. That is almost 20 million naira, if not more than. So you know you cannot deposit $10,000 in your account. So why are you now using $10,000 to trade? Why are you using $10,000 to trade? So it's a good thing you are learning these digital skills, because this is a skill that you can predict the market direction and you make your money, unlike unnecessary things that you just anticipate what will not work. You understand? You will not anticipate what will not work. You are seeing the levels. The chart is clearly in your presence. You are seeing the seller's entry. You are seeing where the buyers are entering from. So it's no big deal. Yes, nobody is above mistake. You will make your mistakes. You understand? Everybody makes mistakes. And 2, don't take more than 3 trades in a day. No matter what you do, please don't take more than 3 trades in a day, and don't open more than $1. Don't trade more than $1 for each of those trades. That means $3 in a day. So when I noticed that you have replenished the demo account with $10,000, I was now wondering what happened. Is it that you have exhausted the $100? So if you have exhausted the $100, how much are you using to trade? I remember initially I already said this already. Is going to you are learning this now, so follow what I'm telling you. It's going to help you. It's going to help you to develop good trading habits. It's going to help you to develop good trading habits. If luck is on your side and it favors you, you never can tell. You understand? My mentor, I think for the past 2 months, was running a trading challenge. I was following him up actually. But to do such a thing, you need serious discipline. He flipped $100 account to $100,000. But this was somebody who started trading with $1. Gradually he started moving to $2. So account flipping is not an easy task. You understand? You need serious discipline and sound knowledge to be able to flip accounts, and it's not an overnight something. So just $3 a day. Please don't take more than 3 trades in a day, and don't each of those trades should not exceed $1 per trade. So if you are taking just $1 per trade in a day, even if all the trades close in loss, good, is better. You will learn the reason why you lost, and if they all close in profit, you will learn the reason why they close in profit. So after this, now I'm going to do some little analysis again. So this thing may look crazy, may look confusing, but it is very, very simple. What I want you to notice is just notice where buyers are entering and notice where sellers are entering. So you can see all these areas are buyers area. The moment these sellers broke this level, it becomes resistance, and then again sellers entered. The moment the market gets to the same level, you already know that the market is working as a level of resistance. I took so many trades here, so many trades, but I was not taking high level. If I want to take high risk trades here, I would have made, like, maybe if I were to be compounding those trades, maybe $300 to $500. But risk management is very, very important. You understand? It's not going to happen in a day, but with time and discipline, it's going to happen. Okay, so here you can see that there is strong buy, but the market didn't get to this level again. Okay, finally from here sellers entered. Okay, for the second time. Okay, this was the second confirmation. So you get, so, and look at, after then, look at what the market was doing. It started moving sideways at this time, even more in depth. It started moving sideways here, using this level as a level of support. Okay, so you can see that after one bearish candle, we are always seeing bullish candlesticks. After one bearish candle, we are seeing bullish candlesticks. After one bearish candle, always bullish candlestick, until eventually the market shoots up again. So in this situation, you can risk maybe 2 trades. You can risk 2 trades in a situation like this. You can just risk to take 2 trades. If you are successful, that is it. Okay, so please don't do what I'm doing. I'm trying to flip account here, and I have years of experience. You understand? I have years of experience. So please, I'm giving you the right knowledge. I'm giving you the right knowledge, and this is exactly what you need, nothing more. Please follow the rules, follow the techniques. And you can see at this particular area, there is a particular level here. We are seeing continuous rejections from sellers. Eventually the sellers entered. Okay, so look at this is the chart, but look at the chart here without any graph, without any lines. This is the naked chart. But when I came online, when I came on board this chart, the market was somewhere around this area. I think the market was around this particular zone here. So when I saw this move, this is one of my favorite moves in the market. Channels, trading channels, be it up channel or down, and then breakout. Channels and breakout, very easy to trade. Okay, and 2, the structure of the market and the candlesticks. Okay, so this is a clear market structure. This is a clear market structure. And there is another screenshot again. look at this is channels. Look at the same channel I'm telling you about, but sometimes the channel may not move perfectly, but there's something you need to observe in this scenario from this area like this. Okay, so you can see that the buyers, the market is making what we call complete reversals. The market is making what we call complete reversals. Okay, complete reversals, complete reversal, complete reversal. Okay, this is USD MXN chart. So it is making complete reversal. So what do I mean by complete reversal? After every bullish candlestick, if the sellers entered, there is no buyers in between. The sellers enter directly, at least for 3 minutes. Same scenario here. So in this type of situation, you just need to wait for a confirmation. What is the confirmation? Any bearish candlestick can be your confirmation. Yes, if you spot an inverted hammer like this scenario here, okay, is a very good confirmation, spotting an inverted hammer. But I was not on this chart. I only took a screenshot. But I came on this chart when the market was somewhere around here. Okay, so when I saw this inverted hammer here, I also saw this inverted hammer. You can see that the rejection came from the same level. After seeing that inverted hammer, you can see sellers entered. I took this trade here, getting confirmation from here. Okay, so after seeing buyers, one buyer as confirmation, this is a hammer candlestick, the next candle you can go, okay, and leave the third candle on its own, just one candle. So in this scenario, you can just pick out one candle, two candle, three candle, four candle, maybe five candle, six candles. You can see we have 6 trading opportunities here, but I was not on this chart. You can see how simple it is. Very simple to open trades in this type of situation when you understand the market situation. Very simple, no long calculation, no long analysis. A lot of the time, the issues we are having is being in the wrong place at the right time. You may have the knowledge, but you are in the wrong chart, trying to scrutinize, trying to analyze what cannot be analyzed sometimes. And two, if you spot market making channels like this, you take advantage of it. If the market is respecting support and resistance, take advantage of that. Okay, and then I think finally there is another chart. I think that was the first chart. Early this morning, the market was making sweet moves. Like, let me see. So the market was making this beautiful move. This is another good market. I know you'll be wondering what made this market good. So now let me zoom out. Let me explain. Okay. When I opened this chart, this is Great Britain pound and US against the United States dollar. And when I came to this chart, the market was somewhere around, let me see. When I came to this market, it was somewhere around here. This was where the market was. The market was somewhere around here. Okay, so I saw the formation of this candlestick. So I noticed something. The market is making 2 bullish candlestick, 2 bearish candlestick, but here is 3 actually. But 2 bearish candlestick, 2 bullish candle, 2 bearish candle, 2 bullish candle, 2 bearish candle, like that. Okay, so what are the advantages I took? In this situation, what are your trades? You already know that the market is making a bearish and a bullish candlestick twice for every 2 minutes. So this is what we call psychology of trading. This is just pure trading psychology, nothing more. This is just pure psychology. Okay, because sometimes your psychology is going to beat your strategy most of the times. You understand? So at first when I entered the market, I noticed this move like this, a cup and handle move. Of course, I told you about cup and handle. You can see a pattern like this. Sometimes it must not really be round perfectly like that. Sometimes it can appear like this. Sometimes it can appear like this. You get? Sometimes it can appear like this. So it depends on the sizes of the candle, on the size. So you can see this is a small brief, just small move here. You can see this is the move, you can see. Okay, so initially I thought that was what the market wanted to do. So I already knew that, okay, in this type of situation, these levels, sometimes they work, sometimes they don't work. These levels here, sometimes they work, sometimes they don't work. But we look at the rejections and the formation of the candlestick until my eyes now opened and I realized that I'm seeing two bearish and two bullish candlesticks. So what did I do? I now say, okay, if that be the situation, I'll wait for a bearish candlestick to confirm my next entry. After spotting a bearish candlestick, I opened this position. Okay, after spotting a bullish candlestick, I'll open this position. After spotting a bearish candlestick, I'll open this position. After spotting a bullish candlestick, I open this position. After spotting a bearish candlestick, I opened this position. Now you cannot continue to take these trades non-stop, because that is what makes trading difficult, because the market changes patterns every now and then. But you take advantage of the short-term patterns and leave the market. Okay, so in this situation, you have how many trades to take? You have, let's say you started from here, you have 1, okay, you have 2, you have 3, and then you have 4. I also took this trade here because of this level here. It's a strong level, strong rejection, and then buyers entered. So that means the buyers started entering from the wick. In this, if you see a candlestick like this, let me draw a big one. If you see a candlestick like this with a strong lower rejection, and then you now see another candlestick like this, beside it, that tells you that the buyers started entering from this rejection point here. That was when the buyers started entering on, and then they move up like this. Okay, so that means if you spot a bearish candlestick coming to the same level after hitting a rejection like this, okay, you can expect buyers to enter from this level, because this is a minor support level at this time. So you can expect the buyers to enter and shoot the market up, especially with other confirmations, especially now that we already know that we are seeing a bearish candlestick and bullish candlestick twice. The market has already made 2 bearish candlesticks, and it is at the buyer's area. So you can open your position with marginal safety, what we call margin of safety. Margin of safety, margin like this, margin, okay, margin of safety, just normal safety, okay, margin of safety. So what we call margin of safety is a situation whereby you are seeing this situation now. Here you can see there is a strong lower rejection, but the body of the candlestick is here. The body of the candlestick are here. So the entire of this area is where the body of the candlestick is formed. Now we are seeing a breakout of that body, but there is the rejection. The entry point is this weak level here, where these buyers rejected from, like this. So if you get the opportunity, you can wait for the market to hit that particular level first before you open your position. in order for you to be safe, so that in case the market didn't close as a bullish candlestick, you will still be in profit. Okay, you will still be in profit if the market didn't close as a bullish, or it closes as a weak bearish candlestick, or it closes with a rejection in price because of previous price action. The present price may reject. Okay, so that is just it. So you'll get my message on WhatsApp, right? 30 minutes.